Hello and welcome to Singapore Tonight. I'm Stephen Chia.
I'm Yvonne Chan.
Now, top story this Friday evening. Residential property prices continued to fall in the second quarter of this year in both the private and HDB resale markets.
But more units were sold in both markets. Aline Poh has details of official data out today.
HDB resale prices dipped in the second quarter of this year, the fourth consecutive quarter where prices turned red. But more transactions were made in the second quarter, with about 4,400 resale flats sold, a 16% increase compared to the previous quarter. Analysts say the increased activity is due to a lack of major festivities in the second quarter, and individuals getting familiar with the new resale procedure introduced in March. But the double-digit growth is hardly something to shout about, according to real estate agency ERA Realty Network.
The Q1 transaction numbers were the historical low for HDB resale. So that's why any rebound in the second quarter does seem to be a significant jump. 4,300 plus units per quarter is actually pretty low. Traditionally, we would see in the days before all these cooling measures come into place, we would see between 5,000 to 6,000.
Over in the private residential market, there was no respite for prices as well. Prices dipped for the third straight quarter. In the second quarter of 2014, prices fell by 1%. High-end non-landed properties were the hardest hit, with prices falling 1.5%, followed by homes in the suburbs where prices declined 0.9%, while prices in the city fringe area dropped 0.4%. But developers sold more private homes between April and June.
There has been some key project launches, and the sales performance of these projects have been quite encouraging, mainly because the price offers are reasonably attractive.
Observers say prices will continue to be a key factor in driving sales, and that developers are also likely to take a cautious stance in future land bids. The Monetary Authority of Singapore said yesterday that it's too early to ease property cooling measures.
Subscription rates for HDB's latest resale of build-to-order flats are up compared to the previous launch in May.
Applications close at midnight and the figures available are as of 5 p.m. Analysts attribute the rise to a strong response for units in the mature town of Toa Payoh, where new BTO projects are rare.
Second-time applicants are particularly keen on Toa Payoh. As of 5 p.m., there were 43 second-timers applying for each three-room flat and 49 applying for each four-room flat. Only 5% of flats in mature estates are allocated to second-timers.
Overall, the demand for two-room flats in Yishun is the highest, with 10 applicants per unit. This is largely due to overwhelming response from singles, with 30 applying for each available flat. Only 120 two-room flats are on offer in the project. 30% are set aside for singles.
More than 3,800 flats were launched in this month's exercise, and there are more second-time than first-time applicants. With signs that first-timers have largely been taken care of, analysts say the government may consider gradually adjusting the quota to allocate more units to second-timers.
And for his outlook on the residential property market, we're joined now by Getty Goh, director at research consultancy firm Ascendant Assets. Thanks for joining us tonight,
Thanks
Getty.
for having me.
Now, private home prices dipped for the third straight quarter as the property cooling measures start to kick in. Are you expecting this trend to continue, or do you see strong support for prices?
Well, we do see the consensus on the ground is we do see prices to carry on a downward trend. I think the question really is for how long? How long will the downward trend last? The jury is out. Everyone have different takes on it, but it is safe to say that the consensus is that prices will carry on going down for the next 6 months to a year, barring any moves from the government.
Well, the MAS has come out to say that they have no plans to ease the cooling measures anytime soon, saying that prices only come down by about 3% in the last 3 quarters, but it actually climbed some 60% over the last 4 years. So what do you think will it take for those measures to be lifted?
Well, I think, there are different views on the ground right now, but I would say, for fear of not politicizing the whole issue, but some people is saying that, measures could be lifted after the election in 1 to 2 years' time. That's one possibility. The other possibility could be in the event of any unforeseen economic calamity that could trigger the government to take action. But apart from all these unforeseen circumstances, we really don't see the government taking much actions as a whole.
But the MAS also made it clear that some measures like the TDSR, total debt servicing ratio, are for the long term. So how is that going to affect new launches by developers or the appetite for new buyers?
Well, I think it would. Let's take things in a broader perspective. In the last few years, the real estate market was very exuberant, and I think it is safe to say that those days are gone. And I think developers are starting to wisen up. And I think in the past, in a climate of like easy credit, that's why there are a lot of people jumping in, and that's why the developers were very bullish. But these days, moving forward, the developers are a bit more conservative in terms of their land bids, because they are also cognizant of the fact that buyers now, their hands are tied. There are a lot of buyers who want to get into the market, but they can't get the kind of loans. The banks are not meeting certain valuation. So as a whole, I would say the market has turned conservative, but in a prudent and good way.
Okay, well, let's take a look at some individual areas, because the core central region saw prices falling by about 1.9% in Q2. That's been the largest quarter-on-quarter drop in 5 years. So what is this saying about the high-end segment?
Well, I think it goes to show that, the people that used to be buying those will be largely foreigners. It is telling that they are still keeping away. I think more telling is that the owners in those areas, they're starting to be more realistic in the kind of prices that they're asking. I think that is the key takeaway that we can read from this, because, well, the fact that it has the largest drop means to say that prices has moderated down most significantly as compared to the rest of the other areas. So overall, I wouldn't read too much as a negative thing. It just means that reality has set in. People are realizing the fact that the days when they can ask for 3,000, 4,000 per square feet probably is not going to be there for some time. That's why prices are coming down.
But close by in the rest of the central region, actually home prices did go up by about 0.4%. New launches such as Commonwealth Towers and Kallang Riverside were among those. So what is that telling us about the market there?
Well, I would say to really have a holistic picture, we should look at both the resale as well as the new sale. Naturally, new sale prices would definitely be a bit higher because the developers bought the land at a higher price. So they would definitely want to sell it at slightly above market to make some profits, or at least to not make too much losses. I think a more telling figure would be to look at the resale prices. How are the resale prices doing? So actually, all these right now is within expectation, and there's nothing really too surprising with the slight slight increase. But we really wouldn't be looking too much into the figures.
Well, just a quick one then, Getty. I mean, given the data that we've seen over the past few quarters, where do you think the Singapore residential property market is right now?
Well, I would say that I would think that it is in a sweet spot. Why do I say that? If you look at all the policies right now, it encourages very prudent purchasing. I would say that even like the MAS would agree that, the household debt is gradually coming down. And some people may not realize this, is that, upgraders, today, if the upgraders want to go in, they're actually not really affected by the ABSD, because there is an ABSD rebate for people who are looking to purely to upgrade. So which means to say that right now what you are really seeing is genuine housing demand. And it's very reflective of how the market is. So I would say that right now we are we are really in a sweet spot. That's why looking at all the things that MAS is saying, we really don't foresee them to be lifting any measures, because it reflects what the sentiment on the ground really is. Yeah.
Okay, well, thanks a Getty, for coming in this evening.
Thanks for having me.
This is speaking with Getty Goh, their director at research consultancy firm Ascendant Assets. Well, moving on, balloting for a place in Primary 1 next year was held in nearly 30 schools today.